It's an important day as telecom companies remain in focus. This ahead of the Supreme Court's judgment at 3 p.m. today. Remember, it is at 3 p.m. This is on the AGR issue. Rima joins in to fill us in with more details. Rima.
Thanks so much for that. Well, on hand are two key issues which the Supreme Court needs to deliberate upon. One, how will the government recover its dues from the insolvent telecom companies which have filed for insolvency, the likes of Reliance Communication, Aircel, Sistema, amongst others. And point number two is how much time should be given to incumbent players like Bharti Airtel and Vodafone Idea to repay their dues? Because the word that the Supreme Court had used, the judge had used, is they should be given a reasonable time. So what exactly constitutes reasonable will be something that needs to be decided. So these two issues are at hand when the Supreme Court meets today at 3 o'clock. Let me just dwell a little bit more on point number one, which is that the insolvent companies. Yesterday, State Bank of India filed a petition in the Supreme Court saying, asking permission to intervene on behalf of Reliance Communication lenders. They say that the spectrum is an asset of the company, which means that under insolvency, the DOT, which is an operational creditor of the company, needs to be paid according to the rules of IBC, which means first financial creditors, i.e. banks, get paid, and then operational creditors, i.e. in this case, the DOT will get paid. But more crucial from a market point of view is how much time is given by the Supreme Court for the telecom companies to repay their dues. The government had asked for 20 years. The telcos said that 15 years could be reasonable. We're talking about massive sums of money. For Bharti Airtel, it's close to 44,000 crore rupees. For Vodafone Idea, it's in excess of 58,000 crore rupees. So that is going to be crucial. Whether or not we get a verdict today, remember that the bench is headed by Justice Mishra, who retires on the 2nd of September. So hopefully in the next 3 weeks at least, we have a verdict. Back to you.
Okay, all right, Rima. Thanks so much for that. Well, the markets have cooled off actually from the high point of the day. The Nifty Bank is now down close to around 80 points as we speak. So a bit of a U-turn out there. And the Nifty as well has come off the day's high. Clearly, the 11,350, 11,400, that's going to be a bit of a hurdle. And what's seen some selling the last few minutes? L&T, that's one of the heavyweights. That's come off the high point of the day. And we also have Bharti Airtel, Bharti Infratel actually, that's come off the high point of the day. But my director tells me that as promised, we have the management of APL Apollo Tubes. That's higher in trade despite a weakish first quarter numbers. Remember, the numbers were impacted because there was a shutdown for part of the quarter. The margins improved and their working capital as well did improve, and the stock market likes that, and that explains why the stock is nearly at a 52-week high. We have Mr. Anubhav Gupta, the Chief Strategy Officer at APL Apollo, who joins us to give us in with, what's the way ahead. Well, Anubhav, thanks so much for joining in. I'm looking at your numbers. The first quarter, the volumes were down by nearly around 39% approximately. Now, last year, you did a volume number of close to around 1.63 million tons. For this year, given that you've had such a big downtick, what do you expect to end the year with?
Yeah, hi, morning, Nigel. So if you look at our Q1 numbers, yes, the volume decline was 39% YOY. But what we need to look at is the kind of ramp up which we saw in month of May and month of June, right? June, we had full 30 days of operation and our sales were higher than the last year, June. And the momentum continued in month of July as well. And we are seeing that happening in August also. For full year, I think it is still tough to give a guidance. Our target is to reach as high as possible, given the momentum has picked up. But also we need to see there are multiple lockdowns in different cities in month of July, and still the supply chain has not ramped up to 100% if you look at the countrywide scenario. But our target is that we reach as much high possible. We are able to touch last year sales volume number. But also second highlight is the kind of working capital improvement what we saw in our business, right? Our net working capital days are down to 10 versus 20 as at March 2020. And the operating cash flow, what we had in Q1 of 500 crores is similar to what we did in the whole of FY20. So more than volume, our focus was on the working capital improvement, which we did. And now target is to ramp up the volume as much possible.
We take that point, Anubhav, this is Mangalam here. Just wanted to know a couple of things. One, you spoke about the working capital days. Is that sustainable at 10? Because once things do open up, you will require working capital financing and the cycle runs up again. So at 10, is that sustainable? And secondly, you said your target is to improve volumes. Last year, you did 1.6 million. That's roughly, 400,000 tons per quarter. This quarter, you've lost close to around 170,000 as against the 400,000 run rate. So the remainder of these quarters, can you see that sort of run rate going by?
Right. Thanks, Mangalam. So coming to your first question on the working capital sustainability. So there are two things. One is this scenario of in the current environment of so much uncertainty. What we observed is that the whole industry is becoming more disciplined, right? So it's not just us forcing our clients to pay on cash, but they are also switching their business from credit to cash cycle. Okay, so we have seen the discipline across the industry, and our competitors also are trying to copy APL Apollo because we are the dominant leader in structural steel tubes. So competition is also trying to copy our model. So I think this is sustainable. June sales are already out. July sales are higher than June, and our working capital has sustained as at 31st July also.
Anubhav, you're going on making that point that June to August has been much better, but yet you're not giving us the volume guidance. So can you tell us in a worst case scenario, what will it be? Will it be a 10% growth? Will it be a 5% growth? You must be having some numbers, right?
I think, Mangalam, if you look at the whole industry, since the lockdown was lifted, the industry is still operating at 80-90% levels, right? Industry has not returned to 100, although APL Apollo has reached 100% pre-COVID, but industry is still down 10-20%, right? And given the cases in India are on the rise, the different states, different cities are having different measures regarding the lockdown.
Anubhav, short point, we're not going to get a volume number from you, but let's talk about profitability then. We require some numbers. Your investors would like to know the stock is at a 52-week high. What can they look at going ahead? Your EBITDA number for the past quarter is around 3,200 rupees per ton. We know that, in fact, volumes were down by more than 30%. So clearly, you're doing some cost reduction measures. So give us a sense then in terms of what is the cost reduction measure that you all have taken. You all must be trying to reduce fixed costs by a particular number. How much of that has played out? And also in terms of your supply chain, you'll be looking at making that better as well to reduce costs. So how much of a cost reduction are you looking at in this year? And can you sustain this number of 3,200 rupees? Can you do even better from here? Go ahead.
Right. So if you look at our cost structure, there are three main fixed costs. Number one is employee. Number two is establishment. Number three is interest as well, what we consider as our fixed cost. So we have worked across these three verticals. Overall, we have reduced our fixed cost by 20-25%. Our system has absorbed this reduction, and we are operating at much higher level than last year, if you look at month of June and July. So we believe that within the reduced cost structure, we are able to perform better than last year, and this should sustain for the next 6 to 9 months during the year.
Anubhav,
so EBITDA
go ahead.
per ton should definitely improve versus last year. Although the volume, I'm not giving any guidance, 5% increase, decline, but our EBITDA per ton should be much superior than the last year.
All right, Anubhav, we take that point. The street likes the quality of your comments, but they would have liked to know the quantity as well, especially given the fact that the stock is at a 52-week high and a big run is what we've seen. But short point, they are likely to do better going forward than what the lockdown had delivered for them. With that, we'll slip into a short break, come back, get you more on the markets and individual stocks.